Welcome back to my channel. Today I'm going to go over the NEAR protocol. For those who are unfamiliar with my channel, what I do is I do research, I feed it into a model, the model has an output, I weigh that output to reality, and then I reflect and modify the model to correlate to the highest ROI possible in the cryptocurrency space. This is the model. The project is NEAR, and I'm just going to jump right into it. So what problem or market does NEAR address? It is a development platform, a proof of stake platform with sharded architecture to scale transaction throughput to allow for unlimited scalability of typical Web3 architecture type of project. Block generation is called Doom Slug, and the sharded design is called Nightshade. The basics of how it works is like this. They have the blocks themselves. A single block is split into shards, and those shards have a certain number of nodes that support each shard. And all of this is done mathematically. I'm unfamiliar at this moment of if these rotate. I would think that they do, so that they can never be isolated and identified. But this is the basic high-level observation of the logistics of what we would expect it to somewhat look like. So, this is the data that goes into the blockchain, and it's just split up into parallelization so that we can get through the throughput we want, and then that is supported by the consensus of some node set. A single block split into shards, and it's mathematically, underpinned all of this, and that's how we can enforce all these things. All right, so the basics is it's a developer and user-friendly architecture. That's one of their selling points. And you can even see their token economics are designed around developers, which is good. And it's been live since April 2020. It has an Ethereum bridge right now, so that's good. It could help that liquidity move over. Now, remember, bridges are risky, so just consider that. It is WASM code. It is ability as well. It's coded in Rust, but it uses WebAssembly and as well as Solidity. So it has all those main developer languages that we would look to expect. All right, I'm going to dive right into what the model expects. So the model states, let's get into it. Model expects future increased demand for the token. Model expects some price FOMO in the future. One of the reasons is the roadmap. We can expect validator control upgrades, but here's a big one. They have infinite scale upgrades with dynamic resharding. That should be implemented within a year from the time of this video, roughly speaking. So it has a relatively good roadmap, and there's some other upgrades that I didn't bother listing. I just think that these particular ones could potentially lead to some price action, especially the infinite scale one. So the roadmap looks pretty good. That could lead to price action. As far as social media awareness goes, it's one of those that are well known. Surprisingly, it doesn't have the its Twitter ratio is not as high as some other projects, but it's relatively, this isn't something that's a hidden gem or anything. It's certainly well known from that perspective. The inflation rates don't really matter as much because the token is in control of those things. The token is representation of the controls of this. Plus, actually, let me dive right into the token economics. So the token is used for securing the chain. It's proof of stake architecture. And to write change to the data, the fees, submitting code, like running code, all these things will have fees using their platform, and those fees are burned. If you have a smart contract, I think 70% are burned and 30% go to the developer, the smart contract. So that gives incentives for developers to write for the libraries for this, so that is a great design. The contract usage rewards is divided by developers, whatever that is. The developer could choose. There's some minimum amount that will go to the code that is written, whatever whatever the fee is for using a smart contract. There is some minimum, but then the developer could choose to raise that. So there could be whole entire business models of software written on top of it based on the token model. And governance by the nodes. So the nodes are the voters in this, and you need tokens to be a node. The node they adopt the versions by client releases, and they could choose to run that architecture. So the token is a good token model, and the token has token burns, so that is 70% burn and 100% burn for other cases. So we can expect whatever value transfers are moving across this, there will be a PDE that will develop from that. So that's why the token distribution is irrelevant. When you have those kind of burn mechanisms, it's essentially like you're getting paid for owning it. All right, as far as the money raised, I have added a new metric to the model called the amount raised time ratio. And this is what the compounded return for the money raised is on a monthly basis since the ICOs and those kind of things. And that is 10%, which is, you got to think those kind of returns could be high, but there's other factors to consider. Such as that these VCs might be making a lot of money, but they also have staff to run and all those other things. So it's not like they're making all that money. What I'm observing here is if it's 10%, it's on that border of being too much in the green for the ICO. But this one looks healthy from the amount raised time ratio for this model. So that means, in layman's terms, that the returns aren't so outlandish that we can expect VCs to dump on us. And this is a bear market right now. That's one of the reasons that these numbers are not so outrageous. So and it has the appropriate amount of funding, I think, to capture market share. So they should be able to do those things. So the ICO performance is great. And it's not experiencing price FOMO right now. It has performed 58% against the average crypto, which is down 43%. So it's outperformed the average crypto so far. But it right now, as it's making this video, it's not experiencing any. I did put neutral because it's up a little bit at the time of this video, but and because it's outperformed the average crypto, it is kind of hot. The project is not like, the reason this isn't red is because it's not like everyone's freaking out and getting it, but it is kind of hot. Like, it's going around the channels, and some of the channels are talking about it. So it's a little risky from that angle. So I did give it as yellow because people are talking about it, especially since since it does have big institutional support and they buy those influencer channels and they promote it, and that's where we're at right now. This is not even close to a small market cap. This is a huge market cap. Circulating is 3 billion. Diluted is 4 billion, and the price of making this video is $4.42. All right. Money needed to move, price up decreases, tokens to sell side to decrease. Those are things that are green. All right, so as far as exponential growth, let's take a look at that. All right, so we're going to look at these different numbers. Total number of new accounts, I'd say yes. You can see from the graph here. This is the new account. So it looks like it's pretty exponential. It looks like it is slowing down right now, but this is probably due to the bear market, and looks like it's going to resume. It looks like it is slowing down with gas used. Remember, these are all bear market numbers, so that's why we're getting a lot of no's here. Number of new contracts, you can observe here, you can see through the video that not all these metrics look very good. Like this one, weekly number of active accounts, that looks like it's slowed down. Number of active contracts, looks like it's going sideways. Now, total value locked looks like it's starting to pick up again. So that I will count as good growth. So those are some of the metrics of use. The biggest users of this thing are the Aurora smart contract, which is the Ethereum virtual machine on Near. So that is basically the biggest use on this thing, is basically Ethereum. That shows me, we're in an immature market and everybody uses Solidity right now. And so that's basically where blockchain is at right now in its history. There's no bridge risk on this particular, if it bridges to Ethereum or if it bridges to some other system, there is bridge risk, but the Ethereum virtual machine on Near, it doesn't have bridge risk. As far as the Aurora token goes, I looked at it. That one doesn't appeal to me based on its numbers. And that's, partially because it's hardly distributed. And I think the best time to look at that, if you're interested in looking at that project, would be around January 2025 based on token economics. That's just the gist of that one. As far as who's getting all this total value locked, it's the Ref token. It's their exchange. And it's used for, pool fees, farming, governance, and protocol revenue distribution. It's got a 9 million market cap. Diluted, it's 48 million. It pays about 25% APY right now in terms of itself. But remember, it's down 95%. So that great job with the APY. You know what I mean? So you want something to be in the green. This one doesn't appeal to me as well, I said. But this one is growing in terms of total value locked. Now, there is risks with the Ref token economics. or I mean with the ref, is that this one isn't so risky. You know, this is 14 million that's there, but the ETH near, I don't know where they're getting their ETH. Obviously, ETH is through a bridge, so you got to think about high risk of the bridges. We just had another bridge hack. We're getting bridge hacks all the time, so I would be very cautious in having any native asset from another blockchain across a bridge. I would be very risk adverse to that right now because their bridges are getting hacked like crazy in the cryptocurrency space. They have wrapped Bitcoin, which is another 8 million. So remember, a lot of these assets are at risk. I'd say there's probably a 33% chance in the next year or two of those assets getting hacked based on what I'm seeing right now with all the bridges getting hacked in crypto. So consider that risk. But I don't think those things will affect Near's adoption because these blockchains can survive even though their bridges get hacked and those assets get stolen on a continual basis. But that being said, right now it's total value locked. Total value is growing. So yes, I'm going to put the niche is being live, and it does look like it's getting steady growth, which is good. The liquidity depth ratio is also quite healthy. So as far as niche, servicing a niche, having a market right now, these are all things that look good. As far as the governance goes for this project, right now it is under the category of centralized. That's what I put for it. But this is the way it looks right now. We have the characters involved, the maintainers, the foundation board, and the community. All right. And the foundation board has most of the control right now. This is just a fact of the way it is. They are the initial power, and they control the initial treasury and the governance mechanisms. And they're laying the groundwork. They're in control of the groundwork for the community, which is not yet in control. But the foundation will eventually allow for them to be in control of the maintainers of the network. The foundation right now votes for the maintainers. Right now, the community is in control of features. It could propose features and speak on them and vote on them, as well as the foundation. But right now, the foundation is the biggest influence. Eventually, the community will be in control of these maintainers, who are the technical group which implement. They're the ones who put in the code that is the features of Near. So this is the basics of the high-level overview of the governance. So it looks like it has a good governance model when all those things go into gear. So I'm just going to put that as the governance. And I actually put medium, even though the foundation has such a high level of control. The nodes are in control of this now, since it is a live blockchain, so that's why I put medium. But the foundation does have very heavy influence over those nodes in the direction of this network. So that's where we are with how distributed it is. Regarding the team, they're they have artificial intelligence and machine learning backgrounds and software and all of that. So I don't need to get too much into it. It reminds me of the A0, which is a micro cap or a small cap, because all of them are artificial intelligence, machine learning type of engineers. So that's one of the things that reminds me about this project. So I just put that these are all healthy components of the team, and they're backed by VCs, etc. So they've been validated from that angle. Let's see here. They are partnered with Consensus, so that's kind of a major partnership, and that is part of that Ethereum virtual machine on this project. All of the developer mechanisms look good because of the code is designed for entitlements automatically for those developers. If this thing is successful, it will have a flywheel and a moat. As far as head-to-head, it's another L1 with a modularity, which is great. Best of competition, I put neutral. Network effect, I put neutral, and first mover, I put neutral, because this thing is in a good position timing-wise with the other competitors like the Polkadots, because it's already live, it's going, and it looks like it's getting that momentum. So it's right in there with the race. I wouldn't say this is a horse in the race. Some other projects aren't in the race because they're too early, etc. In my opinion, I expect the user experience to get better. Value of the services provided to get better. I do expect business models to build logic on top of this because of those entitlements through the contract. So it's got a good code base for building large business models on this. And the value of obviously, many of you guys know when it's an L1 like this, when it's one of these foundational layers of Web3, we're talking about 400 trillion market space because it's going to steal all the world's assets. It's going to eat the world. So it's a very large market opportunity. I think I've covered everything. All right, so the summary. It's not a low market cap with the accomplished CEO. It's not early to social media, but does have a live niche. The pros and cons: good position timing. I think it's a generally good position in the race. Roadmap is near complete, so that looks good. It's designed around developers. Its token model is very good, and it's very well supported by its money and institutions. Cons: heavy influence by the foundation. It does have a slowdown of growth metrics, but we're in a bear market, and it's very massive competition. Those are the cons. All right, I think I've covered everything. All right, if you like this kind of unbiased material, please like and subscribe. My model's goal is to correlate to the highest ROI opportunities in the cryptocurrency space in the most unbiased fashion so that the mathematics behind these models can correlate to the highest ROI. Next, I'm going to go into my personal actions in my Patreon group and what I personally do, and I'll see you there. All right, bye guys.